Hi, everyone. Welcome to the latest Facts versus Feelings, Take 5 with Ryan and Sonu. Sonu, we're going to call this one Recession. I guess the economy didn't get the memo. Sonu, we heard all year and started last year how bad things were going to be, how bad this recession that everybody knew was going to happen is going to happen. The economy is going to be in trouble. The stock market is going to be in trouble. A funny thing happened. The economy was better than everybody thought, and the stock market's done really well. So just recently, we've seen some really strong economic data. You've done some really cool research on it. From a high level, this kind of walks some concerned people off the ledge that there's no recession coming.
Now, look, especially over the last 3 months, we've had a really strong run of economic data. Mm-hmm. Consumers are spending, businesses are spending, homes are getting built as well. New homes are getting built, right? That's basically, in a nutshell, that's the U.S. economy. Right, you take retail sales, right? This is spending on goods. You buy stuff from Amazon, that's counted as a retail sale, right? You buy stuff from a hardware store. Those are all examples of retail sales. And then even, it also included in that is food service and restaurants and bar spending. Over the last 3 months, that's been running at a 7% annualized pace. That's amazing, 7%, right? Now you think, okay, that includes prices as well. Right? Prices are higher, so obviously people are spending more. But then you adjust for prices, right? Over the last 3 months, headline inflation's been running just under 2%. So you take the difference of that, 7%, you adjust for prices, real retail sales, so retail sales adjusted for prices, it's running at a 5% annual pace. That is amazing, right? And this is, an economy that runs on the back of consumption. Consumption is, 65 to 70% of the U.S. economy. A good portion of that is goods consumption, and we are saying that's running at a 5%, pace after adjusting for prices, which is incredible.
No, it is. I mean, we talked a little bit about this at the start of the year, the consumer being in good shape, but we'll admit manufacturing might have been in a recession last year. Housing was, you could argue, in a depression. But all of a sudden, we're starting to see some more positive things on the housing front. But I want to focus a little bit on manufacturing, Sonu. There's getting a little geeky, something called industrial production. It's data that the government gives us that shows how the economy is doing. Let's focus for a second on something people understand. Cars, right? Think about it, Sonu. Back in April of 2020, the U.S. produced like no cars. We made no cars. Why? Because the whole economy shut down. Just recently, we are seeing auto production higher than it was pre-COVID. Am I correct?
Yeah, and no, vehicle assembly. So you're talking about SUVs, minivans, sedans, heavy trucks, all of that, right? Vehicle production is running just under 12 million vehicles. This is an annualized pace. This was as of July. That's higher than at any point in 2019. It's the highest since 2018. And we think that's likely to continue because, as you mentioned, production shut down in April of 2020. And then even over the last 2 years, you had supply chain issues. You couldn't get your chips to put into your vehicle keys and batteries, all sorts of things, right? So that means a lot of vehicles that would have been produced and sold weren't produced. And so there's about a 5 million vehicle shortfall in the US right now. And so production's likely to stay up there to make up for that. So that's good for, again, economic activity. And it's also good from an inflation perspective because as more vehicles get produced and get onto dealership inventories and lots, vehicle price inflation is going to head lower.
Yeah, we've talked about inflation before, but inflation recently, last year was up over 9% year over year, one of the highest we've seen in over 40 years. And a big part of that was used cars because you couldn't buy a new car. You couldn't get them. So you had to go buy a used car. So those prices soared. So all these different factors kind of layering on top of each other are we think positive. So again, the consumer is strong, manufacturing is stronger than people give it credit for, and housing is showing signs of bottoming. So we've got, a minute or so left. Let's talk about earnings. I think at the end of the day, earnings drive long-term stock gains. And if companies aren't making earnings, it probably means that the economy's maybe, wishy-washy weakening. Earnings season just ended. Tell me what overall, what grade would you give this earnings season? How strong was it?
I would give it, there's two things with earnings, right? You look backwards and you think, okay, earnings were down about 5%. From that perspective, maybe you give it a B or something like that. Probably not a C because it came in better than expected, right? But really, if you look forward, and that's what you want to focus on, right? Markets always look forward. So you want to look forward. Estimates for future earnings are going up. They're up about 2% since the end of June, when earnings season started. That's positive. Companies are investing more as well. They're investing more in medium and heavy trucks. They're investing in computers, communication equipment, and semiconductors and aircrafts too, right? all of that's positive from a productivity perspective as well.
No, absolutely. Some definite positives. Let's not forget what Churchill told us, right? The further into the past I look, the further into the future I can see. We know the past has had some issues, but the future, everyone, continues to look really, really strong. With all that, this is the latest Take 5. We'll see everybody next time. Take care. Thank you.